Amit Nadekar, fund manager at LIC Mutual Fund, is joining us to talk more about markets. Amit, afternoon. Thanks for your time. First of all, how are you analyzing the earnings which have come so far broadly? And then we'll talk about parts of the market.
Good afternoon, and thanks for having me over the show. Uh, Talking about earnings, it's I think too early to reach to any conclusion. What do I mean by that? See, hardly 80 companies have kind of delivered the results for March quarter. In fact, if you see out of the NSE 500, only 25 odd companies and only 8 companies out of large caps have delivered the results. Having said that, I think it's a mixed bag. uh, Around almost 50% of the companies have disappointed. 50% of the companies have delivered results better than expectations. If you look at just the large 8 companies, uh, you know that three of them are from IT sector, and we all know the results were not great, and the management commentary was soft, right? The financial side, two insurance companies and two banks, they have delivered a strong set of numbers, and an outlook for those companies is relatively good. From the energy sector and commodities, two large cap companies which have delivered numbers. So the numbers on the energy side have been good, but on the commodities it's soft. So I think it's a mixed bag, but too premature to kind of conclude anything from the earnings season per se.
Right. Amit, specifically banks, large private sector banks, HDFC is out and so is ICICI Bank. I want to understand any concern on NIM or growth yet, or the kind of commentary which has come in on branch expansion and growth are very pretty far is what you were expecting, and you would stay invested in that space.
Uh, See, I will not comment on specific company, but broadly to your point on the NIMs, yes, NIMs are at all-time high, and they benefited from the repricing of assets happening much faster pace compared to, let's say, the liabilities, right? So they benefit from that cycle, and probably that cycle is at coming to an end. In fact, if you see, the system credit growth is in mid-teens, whereas the deposit growth is around 10% plus, right? So at some point of time, that will kind of play its role, and the NIMs will get challenged as banks kind of fight for deposits, right? Having said that, we don't see these NIMs falling apart materially, right? And given the valuations in this sector and structural runway, I mean, let me put that into the context. So if you take 6 to 7% average GDP growth going ahead, which I think is a reasonable number, and 4 to 6% the inflation, the nominal GDP could be around 10%. If you apply a multiplier of 1 to 1.5% for the credit growth, I think credit growth could be at the system level in double digit, and the private banks probably can continue to gain market share and enjoy much higher growth rate. The ROEs in this sectors for private banks at least are in mid-teens. So in the context of the valuation, which are at very reasonable level, and this good growth and good profitability uh, structurally, I think the sector offers a very good opportunity for the investors today.
What are your thoughts on pharma space, Amit? Because after a very long consolidation to sideways movement, that space is kind of trying to come back. Is it attractive, and which part of pharma would you like? Exporters or domestic pharma kind of companies?
Uh, See, you rightly said, the pharma sector kind of picked out 7 8 years back, and then we saw a broad-based kind of correction in this sector. See, what has happened that in the past, the wealth creation on the pharma side happened in terms of generic opportunity which was present in the US. I think that's kind of played out completely, and from a peak margin and peak growth in this space, we saw sector correcting. Even the balance sheets were kind of challenged at that point of time. Today, I think a lot of these concerns have been addressed. Having said that, let me also make a disclaimer here. Pharma sector is not a homogeneous sector, and there are various sub segments there which offer different level of opportunities. But even on this, generic space, which I said, the balance sheets are robust. Companies are diversifying into domestic and specialty, and therefore these large companies are today actually attractive from the business fundamental, growth prospects, and even the valuation. Domestic pharma, I think that continues to be a good structural story. The branded formulation offers a great profitability and the returns on the capital employed. So that space is attractive, and I think 8 to 12% kind of growth could be at the sector level be playing out there for a long time to come. Again, specific opportunities, niche segments like CDMO or even in API, where we have today a much lesser market share globally compared to, let's say, vaccines or generics, offers a good runway in the long run. So I think there are various opportunities in pharma sector, and like you rightly said, the valuations look attractive there. There has been a time correction and price correction for a long period. So it's in sector I think should be on investors' radar, but you have to be very stock selective in this sector.
Amit, what are your overweights right now? Where have you been finding value and deploying your surplus cash, say, over the last 6 months?
See, we have been, bullish on lenders, both on the bank side, private bank side, and even on the NBFC side. I think, like we, discussed at length on banks. So I think that opportunity is very, very attractively priced. And we are, a neutral to overweight on lenders per se, right? Uh, Even on the discretionary side, auto, which has seen a downturn of 4 to 5 years, and probably, will see a long runway in various, three segments. So if you look at passenger cars, Indian penetration is one of the lowest in the world, but offers a great opportunity in terms of both size of the market and the growth rate. Even on, the margin side, I think there could be expansion which can play for passenger vehicles, and it offers today a great visibility and therefore a great opportunity. If you go to two wheelers in auto space, right, we are one of the largest market in the world. However, the penetration level being relatively high, the growth so far has been subdued. But as you are aware, the electrification of two wheelers is probably at faster clip than other segments, and I think which will play out very well over next decade. And then it offers great opportunity that entire stock gets kind of replenished from ICE to EV technology. So even two wheeler space I think is attractive today from a long term perspective, but it will take a decade or more to play out this thesis. If you come to the third segment, which is the commercial vehicles or even the buses, right, it's a lagging sector. And given the kind of push we are seeing on the infra side, the kind of push we are seeing in terms of manufacturing through PLI and even the logistic policy and PM Gati Shakti, I think there is a long runway for even the commercial vehicle buses segment, right? So there's a reason to be bullish on the auto space. Uh, at of course the relative turning of the sector, valuations could sometimes look demanding, but I think they are in the reasonable range. So auto is another sector where we are bullish and accordingly positioned. Even on the industrial side, where I think, or a capital goods, where the valuations are very demanding and expensive, I believe we are at an inflection point. So you would have seen a decade lost for these companies where there was a very marginal growth, right? But given what happened through COVID, be China plus one or Europe plus one, basically supply chains globally getting realigned, I think it has opened up in a great growth story for industrials per se, right? And even the thrust domestically on uh, getting reliance on becoming reliant on, let's say, many sectors which were not either to present in India, like aerospace or semiconductor. I think there is going to be a great opportunity for industrial, in the coming years. And hence, given the sector is at an inflection point, one can still look through that, demanding valuations, but you need to have a right time horizon so that, you make decent money in this sector. So these are some of the sectors where we are relatively, overweight.
All right, Amit, we'll let you go on that one. Thanks so much for your time today.